This bot here is making around 900% ROI. This one 1500%, this one 1400%. What are these bots actually doing, and is this just a one-off or is it actually repeatable? That's what I want to look at in this video. We're going to look at some strategies with trading bots and specifically grid trading bots. I'll go through how these actually work, because if we know how they work and what the strategies are, then we can actually implement our own strategies based on what we want to do. I'll go through that in this video, so I'll leave all the timestamps for each section down in the description. First, we have to know where we can implement these grid bots. Binance have their own version called strategy trading. These are actually grid bots under the surface. You also have KuCoin here, who do many different grid bots as part of their trading bot system. You have something like Pionex as well, which is actually specifically a bot platform with many different types of bots, including futures and leverage tokens, buy the dip, TWAP, and everything like that. We're going to focus on grid trading. I'll leave some links to these below because they give deposit bonuses and other bonuses as well. So check the links if you want to find out what they are at the time that you're watching this. So before using any platform, we can understand how a grid bot works, and that is going to lead us to choosing the right crypto and the right time, and also the right parameters. The parameters are really important. They're the most important thing for a grid bot. Now you can let them choose the parameters, or you can put it in yourself if you're a little bit more experienced. So the first main thing that we want to know is how the grid bot actually works. So I'll go through that very quickly now. You can see this is a grid bot that's running for me, and you can see the green and the red. Now the green are all bids that the bot has there that haven't been bought yet. And all the red are obviously sell orders that haven't been fulfilled yet, because you can see it's right here at the mid price. So that's where the actual price is. And the bot has loads of orders in the system that it's got ready. If the price moves up, it will start selling. And if the price moves back down again, it will start bidding and buying more. So it's just a constant, buy and sell bot that's happening here. As you can see, the red kind of stops right here. This is the upper bound of the bot, so it won't trade above this price. And then where the green stops, that's the lower bound of the bot. It won't buy or trade below that price. The reason why you give it an upper and lower bound is because if you didn't, then the bot, it's not a clever thing. It's like quite stupid, right? It does exactly what you tell it. So if you just don't have an upper bound, it's going to think that it has to trade to infinity to the upside. Now, you might want to do that if you're an ultra long-term investor, but most people want to concentrate their liquidity in the bot. And so you have to give it an upper bound where you say, don't trade above this and don't trade below this, because then the amount of money that you put into the bot is concentrated in a smaller price range. And that means each one of the trades can be of a higher amount, which is obviously beneficial for trading each of those grids. A grid is just simply a buy and a sell order. When they're completed, you take the profit from that grid and take it back into your strategy. And so you want to concentrate your liquidity there. An easier way to maybe explain that is you have an upper bound here and a lower bound here. Anything below or above, it will not trade, and it concentrates all of the money that you put into the bot within this range. Now it's just going to buy and sell the whole way. So you've got all these buy orders in here, but you also have all the sell orders like here. But what happens when the price moves up and down is if you fill all of these buy orders, when you start moving up, what it's actually going to do is sell all of these parts of the crypto that you've bought. And then what happens when the price moves up, once you've sold, if it moves back down again, it's going to start refreshing the bids again. So it is not like buy and sell and that's it. It's a continual bot that just bids at certain prices all the way down. And then when it starts moving up again, it's going to start selling all of those orders that it bid. Each time that you actually complete a grid, so a buy and a sell, that is a grid and that is the profit. Now this can be anything that you want in terms of the amount here. It can be maybe 0.05%, or you can actually change that to whatever you want, or let the bot just decide what the best parameters are. But it's just a continual process of buying as you come down and selling as you come up over and over and over again. With grid trading systems, you can choose between trading spot or futures. Just like in the normal market, spot grids mean that everything is cash settled. So you're going to need $1,000 to open $1,000 worth of positions right here, and that is cash settled, so you need that. If you scroll down, you can see futures grids here. Just like in the normal markets, futures have some advantages and disadvantages. Futures enable you to leverage, meaning if you have $1,000 and you want to trade with higher amounts, Binance in this case, or KuCoin do it as well with futures grids, they will lend you more money and charge you some interest. They will actually let you borrow money. So maybe they'll give you 5 times leverage here. So if you put $1,000 in, you can trade with $5,000 worth of positions. That obviously enables higher profit margins. As you can see, the profit margins of the futures grids seem to be way more than these spot grids, right? So they're generally higher. And that's because leverage is being used, which means you only put 1,000 in, but you can leverage up your profits. Now, the downside of that is that obviously losses come much quicker as well. So if you're with, let's say, 5x margin, you put $1,000 in, and they let you 5x margin, so your positions are $5,000. If you lose 20% of that, that's $1,000, so you're wiped out. So with a 20% drawdown, your entire position is wiped out. Whereas if you chose the spot grid, you would need 100% drawdown to get wiped out. So leverage obviously amplifies both wins and losses, but there are some other advantages. For example, with a spot grid, let's say you have some Bitcoin or BNB coin or something like that, you can actually leave some of that in strategies. So if you do have enough for $5,000 position, you can actually leave $4,000 of that in other strategies. For example, staking BNB coin, which yields around, let's say 5, 6, 7%, right? You can use a small amount of it to actually fund your futures grid. So, you know, there are considerations here. It's not just about using leverage to kind of speculate and kind of, go with bigger positions. But if you do have positions in BNB coin or other coins that are actually staking and earning you passive income, maybe you can use the futures grid to your advantage and use some of that leverage to your advantage while keeping your positions in staking and other yield strategies and using a smaller amount of that to actually fund your grid trading. I'll go step by step through actually implementing a grid, and on most systems it is the same. But before that, I want to go through some things to consider. The first thing is grid parameters definitely matter. This is what you are going to have to put in. Now, you can actually ask the bot to do it itself, and it's going to know what the best parameters are, or at least what has worked in the past, and just give you what it thinks is the best parameters. But you can definitely change this. So the number of grids or the grid size is going to affect the profit and loss, because you can put one grid in and say buy here and sell here. This may be a difference of like $5,000 in the price between one buy and sell. You can do that. That's one grid, but obviously you're not going to be trading a lot, and you're not going to be getting any profits out of the market for shorter term movements. Anything that moves in here is not going to get any grids. So you can choose this to either have the difference between the grids very small or very large, fewer trades or more trades. And obviously that's going to have an impact on how much commission that you get charged as well, and how many trades that you're actually paying commission on. So there has to be a balance here. The number of grids definitely matters, right? More grids is a smaller percentage profit per grid. So if you have many different grids here, then you're going to be making smaller amounts and you're going to be trading more often. Maybe that's good to an extent, but if you have the difference too small, then you're maybe just going to be eating up all of your profits with trading all of the time, and maybe too small isn't good. So there's a balance to be had, in my opinion. Price range also matters. If you tell it to trade between 20,000 and 10,000 Bitcoin, and Bitcoin's trading up here at 30K, you are not trading any of this, right? And so you have to make sure that you manage the bot so that it is only trading or mostly trading in the range that you set. Because if it's trading above or below, the bot basically stops trading and stops earning any potential yields out of the market. And then definitely the crypto that you choose definitely matters. So the perfect crypto would be a crypto that trades extremely violently all of the time within the certain parameters. So you'd want it to kind of go all the way up here and then just come crashing down, and then up here again and crashing down. Because what you're doing is selling all this, buying all this, selling all this, buying all this. So as you can see, that's the perfect example, but that obviously isn't going to happen all the time. There's other considerations as well. For example, do you generally want to be in a crypto that is, not going to just crash through the bottom and never come up again? Because obviously that's going to lose money. So if the price falls down below the grid, it's still going to lose money. You still have market risk here. So what you want is a crypto that is either neutral or up over the longer terms, right? So if it's neutral, just trading in here, that's going to be okay. If it's trading up over the long term, that's going to be okay. But what you kind of don't want is it trading down and kind of not recovering, because obviously you're buying here and you want the positions to sell as well. So just something to keep in mind is, what type of trader are you? Are you just speculating, trying to gain the most volatile thing? Or are you someone that just wants to maybe implement some strategies around your portfolio? Like with Bitcoin or Ethereum, you say, I want to try and eke out some more yield out of the market, and I'm kind of long-term bullish anyway. If you want to set your own parameters, you can do that on every platform as well. I'll show you on Binance here, but it's the same on most platforms where there's a spot grid or a futures grid that you trade from, and then press create and it will take you through to the page. You want to find a lower and an upper bound that you think it's going to trade within whilst you're trading. Bitcoin has been trading in around an 18 to 20,000 range for a few months here, as you can see. So something that you might want to do on auto or manual, you can actually copy these over to the manual settings. The bot system is telling me that it wants a 16,500 low and an upper bound of 21,800, more or less. So you can choose whether you think that's good, or if you think there's going to be a dump, we might go down to say 15,000 or something like that, then you can copy these over to manual and then change it yourself. So you may want to say, actually, I do want to have some size to the downside just in case the price gets down there. So maybe 15,000 like that. And then you might want to have this a little bit closer in so that each grid is, more of your money, right, that you put in. And the amount of grids you can change as well, but we've got a difference in the grid here around 0.5%. So let's say every 0.5 to 0.6%, something like that, is going to be taking one of those grids, and it's going to be ratcheting buyers. If we do get a dump, you'll be kind of buying at those lower prices and hoping for a bounce. And then after that bounce, the bot will start trading out of them as well. Put how much that you want to trade in here. You can do that in either dollars or the dollar plus crypto. And then, as you can see, advanced, just those stop losses again, just in case something happens and you need to get out. Spot trading definitely is more towards people who want to hold for the longer term and are looking for genuine price moves to the upside. Futures lets you trade a little bit different. On the right hand side, you can see there's a lot more to do. I'll go through this now. So the upper and lower bounds are the same, but you can actually trade with a bias. So let's say Bitcoin has been trading sideways for a long time right here. And so what you would do is choose the neutral. That will try and make the most money out of sideways and ranging markets. Now, if you think we're due for a bounce and you think things are actually going to get better, maybe interest rates come down, which kind of boosts the Bitcoin price a little bit, maybe you want to lean towards going long. Now, the bot is going to lean towards going long first and trying to, put trades in that benefit from genuine price moves up. But you can actually go short here. And that is essentially the bot saying we're going to lean towards selling first, trying to sell and then buying back lower. So that long is going to enter with the mindset from a bot that is going to start buying first and then hoping to sell higher when you actually enter the bot. Neutral is going to be somewhere in between. So it depends what you think that market is going to do over the time of your bot. Most of the time, neutral, I think, is going to be okay because it's just going to say, we're just going to buy and sell with the set parameters. Long will start off with that bias towards actually buying first, short selling first. With futures, take the margin way down, something, a few margin. Definitely if you're a beginner, don't use margin at all. You don't need to with the futures bot because that will implement interest that you have to pay, and the more leverage you have is going to reduce the amount that you can lose before getting wiped out. Put how much you want to actually put in here and then obviously implement the bot. But futures let you go short bias, long bias, neutral bias, and then use leverage as well, which is not recommended for most people. I'll leave some other videos down in the description about trading bots and some more technical guides on how they work, and the deposit bonuses to these platforms I'll link down there as well. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.